Hello, everyone. This is Xiao from Hashkey Capital. Well, Hashkey Capital is a Hong Kong and Singapore-based blockchain VC and invests globally. So we are one of the biggest and longest-standing blockchain funds in Asia, with over $1 billion AUM since the inception. And so far, we've already got more than 200 portfolios all over the world. And well, today I'm very honored to moderate this panel on blockchain investment, and extremely happy to have our panelists, Paul, Jihan, and Gavin. Well, it's a great pity that we cannot meet in person due to the COVID, but well, it still feels good to meet people in Metaverse. I believe the audience cannot wait to listen to your insight. So why don't we start with self-introductions? So Paul, would you like to go first? Please give a brief intro about yourself and your organization.
Sure. So hi, I'm Paul Varadatak. I'm a partner at Pantera Capital. I've been with Pantera since 2014. So, before Pantera, I was economic consultant. I was also doing business development and growth for a couple of startups. And then I started off my VC career about 13 years ago. So I've been in VC for most of my career now. And it's been an exciting industry to sort of be in. And with Pantera, I've been sort of leading our investment efforts, a lot focused on early stage equity and tokens. Pantera was started in 2013, one of the first institutional funds in the space. We're located in the United States, but we're a bit more distributed now. We manage about 5 billion in assets under management, and we take a very platform first approach. We provide a lot of services and expertise, both from resources and from personnel to really help portfolio companies. We can get into a little bit more of that later. And we also have over 200 companies. So very, very busy these days. Lots of companies need help, and we're excited to serve our portfolio companies.
Cool, thank you. And the next will be Jihan.
Great, thanks so much for having me. Good to be among friends here. So I'm the founder of Kinetic. Kinetic is also one of the earliest blockchain investors in Asia. I've been in the space since 2013 and started Kinetic in 2016. Started the Ethereum community back in 2014 as well. Similar trajectory to Hashkey. We've invested in over 250 companies, some of the kind of largest and most interesting founders in the space. We're based between Hong Kong and Puerto Rico, and we typically invest in the early stages in both equity and tokens. We also are GPs of a number of other funds. So Kinetic is actually a family office itself. So we don't really have outside capital to invest. We're always investing our own kind of book, but we've recently formed 3 different funds. Neural Capital, which is a hybrid fund of funds focused on blockchain and crypto. Kestrel 0x1, which is focused on data and infrastructure, led by 3 Palantir employees. And then Digital Asset Collective out of the Middle East, which focuses on early stage token projects. So we're investing primarily in the early stage and really just trying to find like the best and brightest founders. And again, happy to be here. So thanks.
Good for you, Jihan. Well, so it's your turn, Gavin.
Yeah, thanks, Xiao, for having me here. Hi everyone, I'm Gavin, managing partner at SNZ Capital. SNZ is a blockchain native and community-driven incubator and investment company since early 2014, 2015. One of the co-founders by then translated Ethereum into a white paper into Chinese, and then we started to build the earliest Ethereum community in Asia. Well, to be honest, it's more kind of a community building efforts instead of investment at the very beginning. So we focus on community building, incubation. Then we started to back some of the very good projects. Similar to Kinetic, we started as a family office. So we use our principal money to invest, and we also invested in some very good GP. For example, Hashkey. We have been the LPs for for Fund 1, Fund 2, and Fund 3. Prior to SNZ, I have been working in traditional finance and fintech space for many years. I started in UBS, then moved to US VC at Block One. Then I moved to Futu to run the business services and strategic investment there. Nice to meet all of you.
Thank you, Gavin. And yeah, you're always like HashKey family. Thank you all. And well, my first official question is about the traditional financial institutions entering this space. So I think this is an obvious trend in the past cycle. So during the past 1 to 2 years, we all saw a lot of like institutions or listed companies trade Bitcoin or other mainstream coins. Also, some fund of funds like pensions or endowments, they all actively invest in crypto funds. Some of them even make direct investment into blockchain startups. So do you think they brought any fundamental changes to the crypto market, or is there any impact on your organization? Still, we start with Paul.
Yeah, I mean, for Pantera, we didn't start off as a family office. So we were always trying to raise capital from outside investors since 2013. And it's been quite the journey. I still remember in 2014, talking to a bunch of family offices and still getting, some basic questions on, why are there 21 million Bitcoin and how does mining work? And it was really high level and educational, and there weren't a lot of use cases to talk about yet. And so we were dismissed by a lot of institutional investors, and most of the time it was really just a lot of education. But we started to get a bit more traction during the 2017-2018 run-up, and while a lot of projects didn't turn out to be successful, we did see an inflow of developer talent, which happens every single bull market. And that continues to sort of feed into more innovation and more capital that comes in. But we started to see institutional investors starting to, look at the space a bit more. And then, we raised our 2018 vintage with a bit more of an eye towards institutional capital. But it was really in 2020 for us. I think it was DeFi spring, DeFi summer, where I believe that they really sort of now saw a combination of the upside and asymmetrical opportunity of investing into tokens paired with actually understanding a little bit more about some of the use case and being able to actually quantify some of the usage of applications in decentralized finance. So what that turned into was a fund that we started to fundraise for in 2020 that ended up being $1.3 billion. And, that fund has endowments, pension funds, corporations. I think, we saw a couple of different trends. We saw endowments and pension funds coming in, but at a fraction of what they normally would put in. But as you can imagine, you put a smaller check, but with the asymmetric opportunity, it can quickly become the largest position within your portfolio. And we've seen that many, many times. So I think that's the thinking here is put a little bit in. It's now one of those things where, you have less job risk investing into crypto. Put a little bit of a toehold in, learn a little bit, partner with the manager, and then see what happens. On the corporate side of things, you saw some of the public companies putting assets into Bitcoin or things like that. I think they also see an opportunity, whether it's banks, whether it's corporations or other crypto companies who are investing into our funds to basically diversify their treasury. And so, I think that's also been, a trend. And I guess lastly, what we've been seeing, at least on the institutional front, is there's a lot of volatility in this space. And a lot of the members of the investment committee aren't used to that volatility. So when the market goes down, you tend to get afraid and potentially pull out. Well, these institutions do prefer a longer term vehicle. So that's why the venture fund has worked really well, because you can have that mentality and you don't have the control of being able to pull out. you can say, hey, I'm going to put money into crypto and I'm going to wait at least 5 years. And that's what they want to do. They want a 5 to 10 year investment working with people that they trust. And, I think this is now the right time because there's momentum. There's a lot of brands coming in. There's a lot of managers that are credible that have very strong track records. Everyone here has a very strong track record. And, I think this is the time to really bring in institutional capital from all around the world.
Thank you, Paul. Actually, we feel the same. It's always a good thing for a fund who has external LPs to have those traditional financial institutions. All right, so Jihan, would you share your opinion on that?
Yeah, I think Paul did a very good job of just kind of covering off the interests of the financial institutions. I think maybe I'll just to add to that. I think that the entrance of the financial institutions into this space has had a second level effect, which is to kind of validate the space for other institutions outside of the finance arena. So I think that the validation of like the banks who are making very big pushes, whether it's Goldman with multiple investments and multiple types of services offered, or Fidelity, that makes it safer for non-financial, non-technology companies to come into the space and feel like they're not hanging on a branch in front of their board. So I think we're starting to see a lot more enterprise engagement from various areas. And one area that we are particularly interested in is actually China itself. Ironically, or maybe counterintuitively, China is probably one of the global leaders in the adoption of blockchain technology. While not, obviously public crypto is restricted, but blockchain technology is quite widespread in different flavors. And I think probably underestimated and underappreciated outside of China. But the largest state-owned enterprises, China Mobile, China UnionPay, even some of the largest ministries, the NDRC in China, are all barreling headfirst into permissioned blockchain technology. And I think, to kind of sum it up, what we're seeing is the validation of these financial institutions making it safe for companies, enterprises of all types to come in. But second, I think it's also a forcing function to expand beyond public crypto into different variants of permissioned blockchain or semi-decentralized blockchain technology. And I think ultimately, that probably will form a large part of the blockchain technology ecosystem, whereas maybe in the first, kind of 10 years of blockchain and crypto, much of the narrative was about public chain decentralized narrative. I think it will start to rebalance a little bit more towards different approaches, including permission, including semi-decentralized, and including very much hybrid approaches, centralized institutions and like financial institutions using decentralized instruments on the back end. So I think that's kind of one of the biggest impacts.
Thank you, Jihan. Yes, I totally agree with that. China is going in a very interesting direction with hybrid blockchain technology. Thank you for your insight. So Gavin?
Yeah, well, I totally agree. What Paul and Jihan mentioned, like those trends have been very significant. Lots of traditional players, either the company or the funds, are flowing into the space. In addition to what they have mentioned, I think some of the companies, they are also evaluating the possibility to kind of collaborate with crypto native or blockchain native player to expand the kind of a Web3 business. Because from according to my own, because I listed like more than 10 companies in Hong Kong and the United States focusing in fintech space back to 2016 and 2017, and most of the companies, well, especially in Asia, they kind of have doubts about the crypto blockchain, either from the asset perspective or from the infrastructure perspective. They have quite doubts. But in last cycle, most of them, at least, they are trying to do some kind of initiatives. Either like some of them may limit the scope, some of them they just kind of establish overseas entities to try those kind of initiatives. So we do see very constructive progress, and we believe in next like 4 years and 8 years, the several cycles, we could see potentially application boom, especially when we see very constructive development in the infrastructure space. Then we can see the gaps between nowadays to mass adoption could be met at some point of the near future. Well, as an VC, right? So we also see lots of kind of private investors there going to the space, and some of them are raising like Web3 funds. Some of them kind of just extend their mandate into investing in tokens and etc. I do see some challenges, to be honest. Well, given they have a deep pocket, they have very good professional guys, and they have more experience in the traditional Web2 space, and they also have some resources like their own ecosystem. But I also see lots of kind of opportunities, like we can work together to and especially, well, from our views, well, blockchain and crypto space used to be still very kind of I would say geeky, a little bit nerdy, right? Some kind of a small group of people, and nowadays we got the chance to come in to embrace the entire world, to go to mainstream. Then we should work together with those big guys. And I see those progress very constructive.
Thank you for your insight. Except for institutional investors, we can also see other types of investors rising in this space, such as developers, influencers, or many startups. They even do investment by themselves. So the boundary of being an investor really started to fade. So my next question would be, as top VCs, what do you think of this phenomenon, and how will you keep a competitive edge in this case? So for this question, maybe we start with Jihan first.
Sure. Yeah, I think what we've seen in recent year, especially with the last bull run, is just there's such an inflow of new funds, new managers, and many different ways. Obviously, in addition to discrete fund managers, both on the hedge fund and in the VC side, we have hybrids, we have DAOs, we have family offices doing a lot more kind of direct investments, we have corporates. So the space has become a lot more competitive and a lot more saturated from just a sheer kind of allocator standpoint. And it really makes, I think for, it's really important for all of us as fund managers to, as you said, differentiate. I think for us at Kinetic, we in some ways tend to be hopefully a bit more counterintuitive. For example, I mentioned, kind of China. We've taken a very big position looking at the Chinese environment, where a lot of, I think, firms, especially American firms, may feel either uncomfortable or underinformed, or perhaps even for geopolitical reasons and optics reasons, can't really touch Chinese investments. Because we're based in Hong Kong, we obviously have a different relationship with China, a different understanding of the region. We believe that there's a lot of potential there. And so through our investments in Red Date Technologies, who's launching BSN, the Blockchain Services Network, and also Spartan Network, we think that's one area where we can provide a different approach. It's not necessarily winning us any friends in the crypto community, kind of supporting permission chains and supporting things that don't necessarily gel with the original ethos of decentralization. But from an investment standpoint and from a pure opportunity standpoint, we think that it's just a very rich environment. We've also started to expand past some of the more traditional ecosystems, Solana and Avalanche, and we're pushing very hard into the Aptos ecosystem. So looking at kind of newer layer ones and new ecosystems and trying to invest in them early. We're going to be looking at an ecosystem fund that we're launching for the Aptos and Move VM ecosystem, which we're starting to get ready. These types of areas where we can be first mover and leverage some of our earlier kind of contacts and expertise and relationships to kind of build those types of defensible positions is how we, hope to try and, survive and thrive in the next generation and the next kind of bull run.
Thank you. All right, Gavin.
Sure. I think for us, like first of all, we are quite focused in community. Like our kind of a slogan or goal is like for builders and by builders, because we started with kind of a building Ethereum community since 2014, 2015. Back then since then we have like physical hubs. Like we also have like the largest online blockchain community. So we have done lots of meetups, hackathons, and other community events. Actually, several days ago, on August the 28th, we just organized an Ethereum community event at the Chase Center in San Francisco, together with AdCon, Ethereum University, and Ethereum Foundation. We got like a Vitalik and like more than 20 like core members of Ethereum Foundation to discuss on the merge and on the lots of very key issues. So we will keep on doing that. So that's the first focus. And second one, from the strategy perspective, we focus on an early stage investment is in line with what we do with the community. We for secondary market, we only do two things. Like one is treasury management. Just like if it's the right timing, we just buy a bunch of like blue chip tokens and HODL, right? Second one, we just kind of buy like cigarette ends on the secondary market. We don't do like frequent trade, and we don't do hybrid and then frequent trading on the other strategies. So we focus on the early stage investments, and we also build with the builders. I'll give you an example, like for example, Inkstones, right? Inkstones, we invested them back to 2018 as an angel investor. The valuation was only $10 million. And we built with them like to support, given they are providing like node operation and API services. We got them lots of an Ethereum well, and we also our own pool using their services, and we help them to build community, etc. Then bring them to kind of last round like $600 million. So we're helping the builders to build their own ecosystem. And also, as Jihan mentioned, it's very important to get close to some of the public protocols. As for Jihan, it's the more Solana and Aptos, and for us, it's more kind of a Ethereum, like Definity, like Chainlink, and those kind of things. Especially, for example, Chainlink, we have helped them to build their team from zero to nowadays, and more than 20 people on the ground in Asia. Then and the next thing that I will mention is like our mission is to connect to empower, because we have seen lots of gaps between so-called Web2 and Web3, or traditional finance or traditional TMT to crypto and blockchain. We have seen gaps between the East and West. We have seen gaps between even nowadays and the day for mass adoption, right? So, and the team, the background is a bit well-rounded. We've got some background in traditional finance and then traditional kind of TMT. If either from the investment perspective, business development perspective, and also community building perspective. So we will do lots of things like to bridge the gaps. For example, introduce like the mainstream investors to the equity run, and also made to engage like the big TMT giants to help some of the startup to roll out their business, etc. So the last thing I want to mention is just to keep learning and be very open-minded, because the industry is just happening so fast, and every day I feel very like got challenged and need to just to be more open-minded and to keep learning. So that's it from my side.
Thank you. It seems like you've done a lot to add value on your portfolios. Well, so Paul, any idea on that?
Yeah, I would sort of echo what Jihan and Gavin mentioned around understanding, what are the assets that have, that you've accumulated and have helped you potentially differentiate up until this point. And so I'd say there's a couple of different things. For us, it's similar to Jihan in the fact that, we've had some theses that have been a bit different than other folks. We focus a lot on local exchanges. So we have invested into the Coinbase of Middle East, the Coinbase of Africa, BitOasis, Valor, Bitso, the Coinbase of Latin America. So the only way to do this, and we've made some investments in China too. And as Jihan knows, like if something's in that region, I call them up, I say, hey, I don't know these guys, but what do you think? I mean, we made, some good local partners in each of these different regions to help us so that we can make these investments. Usually starts with the brokerage wallet sort of model, and then it expands over to maybe some other use cases. I mean, in Southeast Asia, we recently did some things around gaming because in that region with, Axie Infinity and, gaming guilds and, other sort of things. I mean, gaming and neobanks have done very well in Southeast Asia. So we've taken a very global approach. That's one thing. We do have a similar thesis. We are starting to look at new ecosystems like Aptos and Sui. And so that will be collaborating with, some of you guys on that. I think the other thing that is very, very helpful is we do have a larger fund. And so we are deploying our capital and resources into building out a team that can be very helpful to portfolio companies. So we've been hiring, I think there's a few things that we can do on the technology and software side to really help our 200 plus companies tap into our network, our resources, or just connect with each other. We can create things like expert networks. We can hire people internally to focus on maybe 2 or 3 areas in which are most important to companies. So far, we've seen that companies face a lot of recruiting problems. So we just hired Nick Zurich, a director of recruiting who used to scale recruiting for Robinhood internationally. We've hired folks on the marketing, digital marketing, and sort of event marketing just to be able to build more community there. And we have guys focused on sort of regulations and liquidity governance. And so, that's something else that, we really want to sort of lean into is really the fact that we have a lot of portfolio companies. Easiest business development is for them to connect to each other. And then, of course, being able to have, experts internally and externally that can help out these companies. And so at the end of the day, when we go out and try to win a deal, we really hope that the entrepreneurs do their research on us and talk to our portfolio companies because, we feel that we're trying to both provide a baseline level of service, but also really just find a few different ways to, really sort of stand out in terms of the expertise and resources that we can provide.
Sure, yeah, absolutely agree. So sometimes VC is just like a platform and the portfolios can do mix and match by themselves. All right, so I think that's enough for the investor profile. My next question is about geography. So for us, we saw some like new markets arising lately, especially there are a lot of like new crypto centers all over the world. For example, maybe Singapore or Dubai, they're more like a capital hub because there are more and more traditional capital there got interested in crypto and Web3. And on the other hand, somewhere like Europe or Vietnam, they're becoming new developer hub as the developer community is getting more and more active. So is there any trends or new markets you saw or any interesting changes happening in your local markets? Or this time maybe we start with Gavin. You are already on mute.
Sure. Okay. So, well, I would say crypto and blockchain is naturally global. Well, it's like by nature, it's like liberal and very decentralized, right? So the opportunities are everywhere. Although we are kind of based in Asia, but still we've got more than kind of 30% of 30 to 40% of deal flow coming out of the region. And most of the projects are nowadays very international. Recently, I came across with a friend with a very interesting idea. I see they are kind of doing a headhunter company because they have lots of companies that raise tons of money, right? But most of the expense should go to talents. But given the COVID situation, given the decouple, whatever reasons, like it's really hard to hire. And if you go to the traditional kind of headhunters, they don't know how to find a smart contract wallets, engineer. They don't know who can do like community building, etc. So they're trying to kind of set up these kind of services, and they have tried and talked to lots of projects, And for most, well, I would say like 90% of the projects, they do have this kind of interest, right? So they are trying to help like Chinese or Asian engineers helping US projects, etc. So that's also the kind of evidence we are seeing a global community, right? For the trend in Asia, I have seen like there are lots of very good Web2 developers that are trying to move into the Web3 spaces, given whatever reason, like compulsorily or kind of they just kind of do have the passion to move into next generation. Some of them, I would say, they do see mass adoption, because when I was working with Futu, like our CTO once mentioned to investors, when the investors are asking a question about how to keep the system robust. Well, it's kind of a financial trading platform, and it's very important to give the stability, right? They'll say, okay, because he used to run the backend, the entire platform for Tencent QQ and Tencent WeChat. There's more than 100 million people online on the same time, right? So he said, okay, yeah, well, how many team who could have the experience to run in such a big scale, right? So we do well in the past cycle when we were complaining, oh, we don't have very good decentralized app, etc. Indeed, it's some of the reasons due to we don't have a very qualified like builders who could do very long-term planning and could focus on building for several years. But in this cycle, we see more and more very good players. They do have the international vision. They do see, they have been there for mass adoption. They have good experience in building fantastic products. So those guys could be very important and lay down the foundation for the next cycles, like application boom. So that's what I observed in the region.
Thank you for sharing. So Paul, would you like to add some words?
Yeah, so I'll talk a little bit about the US, and it's funny, I forget that Jihan is now in Puerto Rico, so the North America area is actually now under his purview. So I'll talk a little bit about what I'm seeing in the US and some trends here. Plus also, I'm actually in Switzerland right now. So I went to NearCon because we love Near, and spent a little bit of time in Lisbon, and so I probably have a little bit of insight in Europe too. So in the US, I mean, it's actually shifted a bit. I mean, when I joined the ecosystem, it was pretty heavy Silicon Valley, and I think a big part of it was Silicon Valley was pretty early in Bitcoin, and so there's a lot of Bitcoin maximalists, and then you have Ethereum being started in Toronto, and I think Europe really took a hold of it, Ethereum. But I think now as we sort of move into areas like decentralized finance, we're starting to sort of see the intersection of sort of more fintech and more institutional capital mixed in with blockchain. That plus a pandemic, we're starting to see New York really emerge as a leading contender for the hub for the United States. So I'd say right now, New York, especially around Brooklyn. So, similar to how other ecosystems get started, you're starting to see more fund managers being based in Brooklyn. You also have companies that are, that started off and are bleeding talent into the area, like Consensus and Coin Fund and some of the other folks there. And then of course, Manhattan is Manhattan. So New York is really starting to have a lot of DeFi startups, but also a lot of like NFT startups too, because of the media that's in New York City. And so I think we are still seeing quite a few startups emerge out of Silicon Valley, but I think what you'll see in Silicon Valley is probably a little bit more on the developer side, a little bit more on the B2B side. We're starting to see talent come out of Facebook and Google and the big tech companies that are looking to come into this bear market and focus a bit more on data and infrastructure. And for those types of companies, with some of the larger companies that are bleeding talent into blockchain, I think those types of companies will be started in Silicon Valley. And of course, a lot of the VCs are still located in that area. The other area that I think is up and coming is Los Angeles. So as we start seeing things like gaming and NFTs, and the need, as you guys mentioned, the need to get influencers involved, the Paris Hiltons and the Kim Kardashians and just other types of folks that, Ashton Kutcher at Sound Ventures that are even a little bit more of a mix of sort of media and tech. And, I think we're also starting to see things around music NFTs, and we're starting to see, labels kind of get involved with like different projects, royalties on the blockchain. So all of those things make LA fairly attractive for those sort of entrepreneurs. And so I think that's kind of the landscape right now in the US. And I think in Europe, I mean, I'm starting to see, a lot of activity in Lisbon, people moving there for certain reasons, but there's a good community and all of the conferences being sort of built out there. And then Berlin continues to be a pretty strong hub. So that's kind of what I'm seeing right now in sort of North America and Europe.
Thank you. Very valuable insight from the US and the Euro. So Jihan, any interesting idea from you?
Yeah, I mean, I think we kind of mentioned Asia before. I think that, Hong Kong, which previously had like a pole position, has, slipped back just due to COVID policies and kind of, some of the situation on the ground and just the perceived, the kind of perception about what Hong Kong is now. I do think that Hong Kong will have a second wind, probably in the next year, 2 years, where I think there will be a lot more of this, again, this hybrid approach. As a regulated jurisdiction and as a gateway for China, I think that it will excel in ways that Singapore may not. Obviously, Singapore is still very vibrant, and there are people who are there. But as Singapore becomes more restricted, and which I think it will, it might lose a little bit of its shine. I think the Middle East, from a tax positioning standpoint, and especially Dubai, is really starting to be one of the more exciting places, simply because there are so many people in the community that are moving there. And I would expect to see a lot more, not native projects coming out of Dubai, but Dubai becoming more of like a hub in the way that Hong Kong was for many years in the beginning. LATAM is an area that we're keenly focused on. I think there's incredible, value propositions in terms of developer talent, in terms of, a long history of like native understanding of an appreciation and utility for crypto, obviously for payments and for store of value in countries like Argentina. But more and more, we're seeing a lot more focus. And I think that tracks the overall kind of macro energy for startups and venture capital like in that region. So I think that we'll see a lot more coming from there. Totally agree with Paul on LA. And I think that, this notion that, the new neighborhood is not necessarily geographic, it's kind of thematic, right? Where you have music communities, you have, marketing and branding communities, you have content and influencer communities who are obviously distributed, but are coming into the space to activate platforms, to make money, to use the tools, and who may not be crypto native, but they're starting to be quite, active. We have one company based in LA called 10KTF. It's one of the foremost, exciting meta layers for PFP and NFT projects. They did the kind of crossover with Gucci, and highly, associated with that Bored Apes ecosystem. They actually came from the entertainment industry. They were doing, visuals and sound and event organization for like, Justin Bieber and like Jay-Z and all this. So you have these communities that are using their native skill sets, bringing it into Web3 and in ways that aren't necessarily linear from where they started, but bring along these communities, which span, well beyond their kind of native cities. So I think that's super interesting, and trying to track that, it's like mind-boggling. But we're seeing it more and more and more.
Yeah, totally agree. Well, I stay in LA for several days after the NFT NYC, and I really see a very obvious merge between the entertainment sector and the NFT and metaverse sector. Yeah, it's quite impressive. Well, before I let you go, here's the last question. It's all about the investment thesis. So in crypto sector, some investors choose to focus on certain areas that they're familiar with and try to go deeper in that area. And also some others prefer to chase on new things or to do ecosystem investment. So what's your investment thesis, and what sectors do you prefer and focus in right now? So we start with Paul.
Yeah, so I think for us, we sort of seen kind of what happened in the bear market last time in 2018. And, it seems like for us, the best investments during this time tend to be, even just kind of zooming out, knowing that we're sort of uncertain how long this is going to last. So we really want to be investing into great teams that we know can kind of go out there and get to market and can pivot along the way and sort of navigate a bunch of different hurdles that kind of come up during a bear market. So that's the most important thing for us. Luckily, we have a little bit more time to do diligence on deals these days. Things are moving a little bit slower. And, I think for us, what's also been a strategy has been, just even beyond getting into certain spaces, we want to continue to do seed because there's a lot of upside in doing seed rounds. But because we do have a larger fund, we feel like this is the right opportunity to do Series A rounds. We're starting to see valuations drop, maybe, let's just say on average, like 50%. So if I can do a Series A round at the same price as seed was about 6 months ago, it sounds pretty attractive to me, and I can put more money in. So, for the right entrepreneurs in the right spaces, the ones that we aren't in yet, the ones that we really want to make a conviction bet, we'll do the same amount of capital and get, double the percentage or just somewhere in between where we can invest a bit more and still get the sort of ownership that we like. And really, most of the deals are going to be equity deals from what we see. No one wants to launch a token right now. So we'll go out there, make a conviction bet, and take a board seat and really be hands-on with these companies. Now, in terms of the types of areas that we are looking at right now, I think we do want to be very thematic and continue to focus on the infrastructure. That could be, things on Aptos, or it could be, other types of areas. But the ones that we are seeing in terms of business models that seem to make a lot of sense right now are probably ones that aren't servicing consumers, or at least it's going to be a bit riskier servicing consumers, knowing that right now consumers in Europe are probably more focused on, getting electricity than really sort of speculating on tokens and crypto assets. But it's the business model of companies being able to service developers or enterprises or institutions in the space. So we're seeing a lot of companies focused on building better data and data tools, search, indexing, maybe even, aggregating data, on-chain, off-chain data. And, as you know, sort of data is important for things like credit, uncollateralized lending, or just competitive analysis. So that's an area that I feel like is sort of getting pretty flooded, and VC capital starting to come in, and we're starting to look at a few different things over there. I think there's certain sectors around security that doesn't go away in a bear market. Bear market, people still need smart contracts being audited. They still need insurance, all this kind of stuff. So we feel that and even things like taxation, accounting, like these are all areas that are still going to be fine during a bear market. And so those are the types of businesses, ones that are just providing tooling across. And I think the other area that we're starting to see is we're starting to see private wealth managers, banks starting to get into crypto. So I think they're going to need tools to be able to get their clients in a compliant way into crypto. And so, this is going to happen globally. So we think that's an area also.
Very cool, very focused. Thank you, Paul. So Jihan, would you share your thesis?
Yeah, rightly or wrongly, we've kind of mostly operated without a thesis. You know, we tend to be very broad in our investments, and I think in the beginning it was just for lack of discipline and kind of, you know, an overactive imagination about where the space could go. And of course, not having LPs to kind of force us to to stay on target is good and bad. But interesting, I think in the last, you know, kind of year and a half, 2 years, I've actually really settled in this idea that we actually do have a thesis, and it's one that we kind of think about as hyperlateralism, where actually being quite broad in the blockchain space is not a bad thing, because at least in our experience, it's helped us to understand that similar to, you know, the vastness of the internet, the vastness of the blockchain is similar as a surface. And we've seen a lot of our portfolio companies who are seemingly in very, very different areas converge back onto the blockchain. And so everyone actually ends up being related. We invested in staking, we invested in node infrastructure, we invested in DeFi, we invested in NFTs, very different areas. But then in the last cycle, we found that actually they're all related and they're all crossing over and they all work together. And there's actually quite interesting interdependencies, whether, you know, you're a wallet or a custodian, which becomes an NFT wallet, which starts to enable staking, which then layers on DeFi. It starts different, but it ends up the same. And that's kind of been our thesis in terms of not being too focused on one area and just being open to how all of these will interact and interoperate. Because definitely in this cycle, we're seeing that being realized. And it's pretty exciting when somebody has that light bulb moment where they say, oh, actually, I can use one of your portfolio companies for this. Suddenly they're talking, suddenly they're, you know, in acquisition talks, and suddenly they're the same company. So it's pretty exciting that way. I mean, I wish I could be more kind of focused, and our other funds, Neural, Kestrel, and DAC, they are more focused, but at least for Kinetic, we're just, you know, kind of running around the fields and looking at for fun founders who are doing cool things.
Very cool, very cool. We'll start with starting with no thesis, but ending up with a whole ecosystem. That's very interesting. Okay, so lastly we have Gavin.
Yeah, so for us, first of all, we do have two principles. First one is like focus on the community building. So for some of the investments, like, well, it may, from the business perspective, may not make sense, but we still need to support the guy, especially, you know, like we have went through like the cycles, and if the founder is the right guy, he will finally find his, like, you know, find his day, right? The second thing is that we focus on very early stage investments, mostly like seed and angel round. So like 50% maybe the first check. So yeah, so for some of the very good company with a relatively high valuation, we will kind of be happy to miss, right? So while they're a good ecosystem, then we will try to find something building on their ecosystem instead of investments into the kind of big guy and themselves. From a sector perspective, like, well, internally we divided into three spaces. First one is infra. It's focusing on solving the fundamental issues like scalability, the privacy, even how to peacefully dealing with the regulation, etc. And also, as Paul mentioned, lots of tooling company is very important to if like we want to get the Web2 like onboarded into the Web3 world, right? So that's the kind of basic breaks for the further kind of, it's a foundation for future. The second is application. Well, nowadays mostly gaming and NFT, but well, we are seeing like more application coming, and also it's like very necessary for the industry to have like a killer apps, right? Otherwise, if we continue to see, okay, we are building infrastructure, people may get like a bit tired, right? Especially when, well, Vitalik and the Ethereum CC, he mentioned like it's already past like 55% of the, if we are talking about the building for infrastructure, then we should, you know, have more kind of application coming. So we are looking for more opportunity in this space as well. But I also agree with what Paul has mentioned. It's kind of early in this cycle. Some of the projects, they might not be able to survive the entire cycle. So we will be a little bit selective. On the other hand, we are continuing to provide more support from all different angles to help our team to pave the way to success. Last things, all we call like X5, so all the things related to financialization. For this segment is divided to two parts. First one is more related to centralized finance, traditional finance. But for us, given it's kind of tech VC, we focus more on kind of niche sectors or like tools to bridge the gaps, or focus on some niche products. And for some very big guys and out of a shooting range, then we will get Xiaoxiao on board, right? Hashkey as the close partners to do some of the investment. For DeFi space, we tend to be a little bit prudent. Well, we did invest in MakerDAO and Uniswap in a very early stage. It kind of, from our perspective, it's very fundamental innovation in the DeFi space. But for some of the, for example, some of the kind of lending protocols, they may, if not very prudent, they may just kind of release the risks who used to be regulated properly, right? So then it's kind of the benefits or kind of the earnings just coming from excessive risk. For those kind of projects, we tend to be a little bit more prudent, and but we're still looking for kind of fundamental innovation in the space. So those are the focus from our side.
Thank you for your opinion, Gavin. That will be all of the questions for today's panel. I think it was great sharing, and we all got some impressive insights. So thank you all for today for the time.